I'd like to invite Hamed Fayez to join me on the stage. Hamed is Senior Executive Vice President, Head of Retail Banking at NCB. He is also a board member of REDF, but today he's going to be speaking with his NCB hat on. So please join me in welcoming Hamed to the stage. Hamed, thank you very much for joining us. Thank you for supporting the conference. This is your first time on the Euromoney stage.
It is.
So we'll try and make it easy for you.
Glad to be here.
Thank you very much. NCB, I mean,
Yes.
you are a major heavyweight in the banking world and here in Saudi's banking sector. What is the bank doing in terms of its role in the next stage of the market's development?
Well, thank you for the question. Let me start with some historical context. 6-7 years ago, we were actually nowhere to be found in the mortgage map. We were ranked 11th out of 12 banks, as we were very late to the game. Since then, we shifted our focus towards this promising product and never looked back. We doubled our portfolio over the last 3 years, having outpaced the market growth by 2.5 times to 1, and reached second place late in 2016, second only to Steve's job, and it's becoming very difficult for us to reach him, so he's making it difficult on us. Throughout that process, we're able to help 28,000 families own their own homes through our financing products. So it's been a great journey on a BAU basis. Having said that, and if we pause and look forward, we had to reshift our strategy to match that of the country. And with the massive and aggressive and ambitious transformation program that the Ministry of Housing and REDF have established and are leading, we had to look at it differently. The whole mortgage ecosystem have changed dramatically. So the way we looked at it is threefold. One is on the supply side, and we've been working very closely with the Ministry of Housing through our corporate banking team to try to be there with the developers and help finance them, especially those who are approved by the ministry. On the supply side, which I'm responsible for, we are amongst the few banks that have signed up and are now launching all of the products this month, early in this month. We aspire to be REDF's partner of choice in that regard, and we're doing everything we can to do so. And then on the enablement side, the enablement which we saw the minister talk about, especially at the Saudi refinance company, Saudi securitization and creating a secondary market. We are working today closely with SRC at a number of levels. Retail to sell a portfolio, treasury to buy, and corporate to finance. So we're doing all of this, plus continuing to increase our reach across the kingdom through establishing branches everywhere. We opened 25 branches last year, the largest number by far, and we're going to continue our expansion program. This will help us reach each and every single customer and citizen across the kingdom and provide them with the right mortgage program and product.
So we talk about mortgage, and Steve said it's all about making it simpler in terms of the mortgage products on offer. What do you think? I mean, are the products that your bank offering what the customers want? Are you offering the right thing at the right price?
Yeah, I totally agree with Steve. Today, I think amongst the basic platform that banks have and REDF programs and products, I think we'd cover every single segment and market and geography and sector out there. Having said that, the market will continue to evolve, it will continue to mature, and that will add an element of complexity to it. So if you want to differentiate yourself at that time going forward, you're going to have to continue to innovate. And you're going to have to continue to focus on the customer experience and journey, again, similar to what Steve has said. From the bank's perspective, I think we have the platform, we have the product proposition, and we have the history of innovation. We were the first to come out with the 2-in-1 and step-down products, which are now being offered en masse, and actually REDF are actually offering variations of those products. But if we are to maintain that innovation leadership position, I think we need to up our game there. So, and that's the plan.
And are the rates competitive? you know, the rates for the financial products?
Depends on who you ask.
Okay.
So customers will say no,
No?
banks will say yes.
Okay.
But if we look at it objectively, research does show that consumer finance rates in Saudi are amongst the lowest in the world. And I think that's partly on the back of the relatively lower risk we assume, given that most of the products are payroll backed. Having said that, well, let's actually even look at more detail in terms of rates. There are two types of products that are largely being offered in the market: the variable rate and fixed. Variable ijara, fixed murabaha. In the ijara side, we'll start with very low rates, but you take the repricing risk, and you never know what will happen in the future. And the murabaha, we're pricing higher, and I think that's the market overall, but that's on the back of the lack of a long-term yield curve, objective yield curve that one can count on. But that is being addressed through SRC. Going forward, I think more fundamental drivers will determine what happens to rates. Those drivers may be contradicting, by the way, but we're going to see monetary policy determine rates, so increase in rates, whether it's in the Fed in the US or subsequently here. Competitive landscape, more competition is coming to the market. We're all competing together, and that puts downward pressure on rates. You have obviously the establishment of a long-term yield curve, and finally, all the work that is being done in the real estate linked capital market products and tools. I mean, all of this put together, I think, will, as similar to other markets globally, will determine what happens to rates.
So I think you've already answered my question, which was, is there sufficient liquidity in the system?
There is sufficient liquidity in the system for, again, business as usual and current basic platform. We heard, again, from the Minister and Khalid, and the plans are to go from 130 billion bank-based mortgages to more than 400 billion in the next 3 to 4 years. Current conventional funding sources, won't be enough. Having said that, the role of SRC becomes much more critical, and the role of capital markets become much more important. And the plans that we know about, I think, will support these growth figures and will help us capture those funding opportunities and make sure that we have the right liquidity to be able to offer these programs.
So the ability to securitize and refinance the housing loans is crucial.
Is critical to the success of these programs.
Wayne from Deloitte gave us a nice overview of, Malaysia, Hong Kong, the US, very developed housing markets. What's next for the market here, and how do you see it in, say, 10 years' time?
10 years is a long time.
It is a long way off.
We're too excited about the next 3 years, so let alone the next 10 years. However, let's look at it in two ways: top down and bottom up. Top down, we've seen the numbers, the commitment by the government in terms of supporting the housing ecosystem. We've seen Vision 2030, NTP 2020, Vision 2030 realization program for housing, PIF housing-related programs, REDF, and Minister of tons of top-down for real estate or mortgage-focused or housing-focused programs that shows the commitment and the determination of the government to make this a massive success. If you look at things from a bottom-down perspective, from a numbers perspective, in Germany, mortgages out of total housing market is at around 44%, UK is at around 65%, and the US is more than 90%. In Saudi Arabia, we're at 12%. So the opportunity there, plus the top-down commitment and support and ambition, put together, will give you a great opportunity for, and as Steve said, everyone. It's not only one bank or one it's a financing company. I think the whole system will tend to benefit from what we're seeing here.
And you're saying, so 12% of the population have mortgages so far. How important?
No, not 12%. 12% of homeowners.
Of homeowners are mortgaged. Yes. Okay. So how important is customer financial education to improving that? And what actions are you, as a bank, undertaking to ensure that your customers are aware of all the changes that are happening?
It's very important, it's critical, and I think, learned the hard way.
Yeah.
There was a repricing situation that took place a couple of years ago when SIBOR started to go up, and unfortunately, it was clear that some of the products were not sold appropriately, or advisors did not take the time to explain the characteristics of each product. So since then, we've invested a lot in training our human capital. We've used every single channel we have to reach our customers and our employees, whether it's digital or social media or branches or internal communication, just to make sure that people understand what are we doing, and especially given the number of programs that are being launched now. I mean, understanding and explaining this to customers is going to be critical. We have adjusted our performance management system and processes to take that into account, and we have taken a lot of the high value, less complex products out of branches into other channels and focused our core efforts in branches towards products such as this.
Yeah.
So mortgages, takaful, investments, things that you need advisory services, and you need time to spend with customers to be able to educate and sell appropriately as such. So we've done a lot. It's never enough. We'll continue to do more, but I think we are in a much better position today than we were before.
Fantastic. That's fantastic. Hamid, thank you so much. You have a busy 3 to 10 years ahead, but very exciting.
Absolutely.
And thank you very much for joining us on stage.
Victoria.
Please join me in thanking Hamid Fayez.
Thank you.